Thank you guys so much for coming to today's Technical Tuesday trading session. Today is March 26, 2019, and I hope you guys are excited about trading. I hope you guys are finding some benefit with these Technical Tuesday sessions. Of course, this is just a brief summary over what we're expecting from the Euro USD and the US dollar Japanese yen, and we also may share some technical nuggets here and there. But with that said, I guess we can move forward and talk about our first currency pair, which is the fiber or the Euro USD, and we're currently looking at the weekly chart. And as I mentioned before, I know I mentioned this 100 times over and over again, like this bearish flag pattern that we talked about a few weeks ago could still be in play. We have this bearish flag continuation pattern. For those who aren't familiar with classical chart patterns, we have what you would call a bearish flag setup, where we have this flag pole, this impulsive move lower represents the flag pole, and this move within this sort of like channel, this ascending channel, is what you would call the flag. So then price broke through the flag a few weeks ago, but recently we had a correction, and we're going to talk about that later. But price looks as if it still wants to respect this bearish flag trend continuation pattern, and we may see a slide lower on the Euro USD all the way down to $1.10, because what we have is a measured move. The flag pattern or the flag pole, we just have a measured move extension from the high that was created on that flag. So price could extend all the way down to $1.10 institutional level. So then that's something that we could see over the next few weeks or next few months. But one thing I want to point out is how last week's candle closed. Let's just zoom into our charts. So, you know, what I'm going to do right now is zoom in, and I just zoomed in. And as you can see, you know, the previous candlestick is last week's candlestick, and we can see that it closed a certain way. Now, for those who are familiar with candles and candlesticks, let me ask you guys a question. Now, did this weekly candle close bearish, or is it strongly bearish? Like, tell me what you think about this candle, because I know it's very important and that we understand how the week ends and also how our day ends. You need to look at end of the week candles, and you should also look at end of the day candles. It's very important for you guys to look at those candles so you can figure out what's taking place. So then I don't know. Okay, Alex said it's a bearish signal reversal. Yeah, Marie said bearish long wick. Exactly. We have this long wick to the upside, and the wick tells you the story. But guess where this wick went to? We saw price push higher, and it tested this flag support, or this former ascending channel support. This channel support functioned as resistance. So then this could tell us that the bearish momentum that we was looking for could still be in play. You know, what we saw last week with the FOMC announcement, I know we saw that strong bullish spike to the upside. You know, that was short-lived, and that was transitory. It was temporary, and we could see a nice slide to the downside. And this strong weekly bearish candlestick with this long wick to the upside tells you that there's a lot of supply in this area and sellers that are positioned to keep price lower on this pair. So then what we can expect is bearish momentum, but we need to take it a little bit further, because of course this was last week's weekly candle. This was how it closed, but we should also look at Friday's candle to get an idea, because if we could see confluence, then it could tell us what our bias needs to be for the week. So then if we zoom out, let me just zoom out and go to the daily. Let's go to the daily right now. Okay, and what I'm going to do is also zoom into this section as well. We're going to zoom in. Okay, so then this was yesterday's candlestick, which was Monday's price action right here. But this was Friday's price action. Now, let me ask you guys a question. Okay, so then it's pretty apparent Friday's price action was pretty much bearish. We had another strong bearish candlestick on Friday. So then it's pretty apparent that based off of what we saw on Friday, with that strong fall and slide to the downside, I mean, price fell sharply. It fell strongly on Friday. We need to look for an opportunity to short or sell on corrections in price. So then we already know our bias. Our bias is to sell this pair based on the candles that we see right here. With, you know, the weekly candle, of course, you could just look at that candle by itself and know that you need to look for a selling opportunity. But also this, you know, last Friday's candlestick also with this strong bearish candle, and we saw that price closed below the low of the previous two candles. It closed below this low right here, which was Wednesday's candle, which was the candle that created that huge spike to the upside, and it closed below Thursday's candle low. So it closed below the low on Wednesday, and it closed below the low on Thursday, which means that we should be looking for opportunities to sell. Like, of course, a lot of traders, they focus on different things, you know, fundamental factors, but when you see strong technical signals like this, then you need to really pay attention to these signals and look for opportunities to short on pullbacks or corrections in price. So yeah, now I know Marvin wants to share something. I know he's waiting to say something. So yeah, Marvin, did you want to share something before?
Yeah, I was going to mention something briefly because I know these are normally technical analysis sessions, so we don't really go over some of the fundamentals or even some of the intermarket catalysts that actually help to drive currency prices in either direction. But of course, like Melvin mentioned, on last Friday, we had this massive sell-off. I wouldn't call it capitulation, but yet you can still see that there was an uptick in volatility, and that, you know, this was indicative of some concern because you saw how strong the volume was and momentum was here. But it was primarily due to a combination of various factors. Some of you guys who have been with us for some time know that even the geopolitical concerns going on, the diplomatic relations are weighing heavily on risk-oriented assets and financial markets. So then, of course, this is really caused central banks to more so adopt an accommodative monetary policy or even move towards an easier monetary policy. So then this may mean, providing stimulus in either way, purchasing assets, on the long end of the yield curve. And that's what really contributed to what we saw happening on Friday, where we saw this huge sell-off. What happened was that the 10-year U.S. Treasury yield fell below the U.S. 3-month Treasury yield. And the reason why that's the case is because with the likelihood of central banks purchasing on the long end of the curve or purchasing long-term bonds, that brought the 10-year yield low. And it brought it lower than the 3-month yield. And also the fact that the Fed and other central banks have been sort of hiking just in the recent terms or just in the past few months, it brought the 3-month yield a little bit higher. So then we saw this inverted yield curve and it fell into negative territory. And if we had time, I would show it to you guys, but this is what contributed to the sell-off because that's indicative of recession. Normally that signal always leads any recession in the next few months.
Yeah.
So then that's the reason why we saw stocks sell off. But right now, we're seeing, especially with this currency pair, we're seeing a level of stability right now at the moment. But we're still short, on this particular
Yeah.
pair.
yeah, we're still short on it, but like what Marvin mentioned with the whole inversion curve, like the yield curve being inverted and stocks falling, that would create more of a risk averse almost environment. So then the US dollar is trading like a safe haven right now. Of course, the Fed sort of is more dovish, you could say. It's not as hawkish as it was before with the interest rate hikes. So right now it's trading more like a safe haven. And whenever you hear news like that, as far as, or whenever you see that type of phenomena with inverted yield curves, it's going to cause for people or traders to be concerned. So then, we saw the dollar strengthen. And one thing I want to point out is something technically. I know Marvin talked about something fundamentally, but I wanted to share with you guys something before we begin. So then you see here that on Friday we had this strong bearish candle, and from there we wanted to look for retracements in price. So then on Monday we saw this retracement take place on Monday, and where did price go? Well, if you look at the wick right here, this high, it's sort of similar to these wicks right here. Remember, the wicks tell you the story of the market. We have, this candle's wick is around the same area, this candle's wick, this candle's wick, this candle's wick. So then whenever you see similarities with the wicks and where they're located as far as price areas, then that could let you know where price could potentially retrace to. So what we want to do is draw a line right around there where those wicks are. And you can see here that we do get some sort of price action or price phenomena, right around that particular zone and area. But, we saw price retrace and push higher. And then that's when I was looking for an opportunity to short on bearish confirmation. So then we did enter a sell trade. And at one point, I'm like, okay, is this going to go against me? What do I need to do? Do I need to close out early? But I decided to stick to my guns, and it actually ended up working out. Well, it hasn't worked out yet. We're still waiting for price to reach our target ones, which is at around 1282, 1.1282. But and then our target twos is around 1250, 1.1250. So we're still waiting for that. But as of now, we're okay. Price is around break even right now. So then hopefully we'll see a continuation of this slide lower, which I believe we should see. If we do get a close below this low for today, the daily candlestick close below this low, then we should definitely see a slide lower to hit both targets. That's just my assumption, and that's just what I believe. But that's exactly what we're looking forward to on the Euro USD. And what if we do get a deeper correction? Well, let me just share with you guys what I'm looking at. Okay, so then let's go to the 4-hour, because we could see a deeper, correction, and price could retrace a little bit deeper. Let me drag this up. For some reason, ever since they changed the software, it's been acting kind of slow, this software. But oh yeah, this webinar software. But yeah, so what we want to do is identify a zone, an area where we could potentially see that bearish rotation take place. And I don't know if you guys remember, I know we sent out a setup in our Telegram channel. For those who are not a part of our Telegram channel, make sure you join, because we actually share information in that channel that we do not share through email. Sometimes we share stuff on that channel because it's quicker, and sometimes we're not in front of our computers or laptops to really write an email and send you guys this information. But if you do have access to Telegram, make sure you join our free channel, because we do send out information via that free channel. But on that free channel, we identified a zone that we was looking at. We said if price retraces to the 1325, 1350 zone, then look for a bearish rotation. So then, based on that analysis alone, we still have room to go, even though I think price is going to slide lower, mainly because of the way this candlestick is right now. We'll have, it's going to be about 45 minutes before this candle close. But you can see that it's closing very bearish. I'll zoom in a little bit. But this is the zone that we're going to look at. And let me just draw it in. So, we said 1325, which is, or 1320, you could say, around this area, 1320, and around 1350. So around 1350 is where price could potentially go. So yeah, I'll just leave it at that. Even 1348, 1350, similar area. Let me change the color. So anywhere within this zone, we're looking for a selling opportunity. But just like I mentioned before, I do believe that we should be seeing that bearish rotation take place. Now, price tested the 20 simple moving average on the 4-hour. And if this candlestick closes with this long wick to the upside, we just zoomed in. If it closes bearish, like strongly bearish like this with this long wick to the upside, then it could support the decision to go short. So then, hopefully it closes that way. You got 45 minutes until the close of this candlestick, so anything can happen in 45 minutes. So then let us keep our fingers crossed and hope for the best. But for the most part, I do know that price should be sliding lower. That's what I believe. Of course, in trading, you can believe one thing, you can have expectations, but sometimes the market does the exact opposite of what you think should happen. And you have to be okay with that. You have to be willing to lose in order to really be able to sustain yourself in this business, because sometimes things happen that's outside of your control. But right now this candle is looking very much bearish, strongly bearish, but we can't go off of what's being shown right now. We need to look for the close of this candlestick in order to know for certain what our buy should be. But right now we're still bearish, and we're still in this sell trade. So let's see what happens. But are there any questions about the Euro USD before we move forward? Going once, going twice. Okay, so yeah, I don't think there's any questions about the Euro USD. So then what we can do right now is go to our next pair, which is the US dollar Japanese yen. And what I'm going to do is I'm going to zoom out and go back to the weekly chart because I want to show you guys something on the weekly chart for the US dollar Japanese yen. Yeah, and guys, if you guys don't understand anything, just let us know. We really want to help you guys out. Like, we share enough in these sessions to help even those traders that, at the moment they can't join our private community. We share enough just to help you guys have a good footing when it comes to trading. Just to have a solid understanding of what you need to look for in order to really trade the market successfully. But right now, what we're going to do is go to the US dollar Japanese yen. All right. So right now we're on the US dollar Japanese yen, and we're currently looking at the weekly time frame. And what we want to do is zoom into this section right here again, because what we want to do is do like what I mentioned the last time. This is last week's candle, right? And we can see that last week's candle, I believe this is Monday, Tuesday, Wednesday, Thursday, and Friday. You can see that Friday's candle engulfed all of last week's price action, even up to Monday.
For the same reason.
This one candlestick right here broke and closed below even the low that was created on Tuesday. But it engulfed pretty much all of these candles. And what we have is a strong bearish signal right now. And what you can do is wait for corrections or retracements in price before you look for an opportunity to sell. However, there could be a buying opportunity around here as well, but I don't want to talk about that for now.
Yeah, I was going to say it for the same reasons.
Yeah, and I know Marvin wanted to mention, he told me to mention this to you guys, but the reason why we saw this slide to the downside is for the same reasons that we mentioned earlier when we was talking about what happened fundamentally, when we was observing the Euro USD. The same reasons for this slide lower was what, the same fundamental reasons contributed to this slide lower. So
Yeah, I
yeah,
was gonna say the only exception, even with the U.S. dollar, Japanese yen, you know that the yen is really the preferred safe harbor among currencies. So then you remember the yen loves misery. So then we see this huge sell-off and just this demand for the yen on increasing concern and just uncertainty around, you know, global slowdown and fears of recession. So then you can see here that the yen greatly benefited from that news as a safe haven currency. When we looked at the Euro USD, the dollar benefited as a safe haven. But you remember, just like I said a few seconds ago, the yen is the preferred safe haven currency. It's the one that's more important, or during times of risk aversion, benefits the most.
yeah,
So then that's the reason why we saw this huge sell-off. You can see, like, just like Mev said, you see this bearish engulfing candle on last week as a result of that particular bias for the yen.
yeah. So then right now what we want to do is look for an opportunity to sell on a correction in price. And before we go to the daily chart, I want to do something. You know, oftentimes, well, let me just I'm just going to share with you guys right now a little nugget. But there's times, like, if you draw in your Fibonacci from the high of this weekly candle right here all the way to the low of that same weekly candle. So let's do that right now. Okay. So then right now we have our 50% level right around here, right? So then what we want to do is place a marker there, because there's a possibility for price to retrace, guess what? Up to this level, right? Up to that halfway point of this candle. So then that's something that we want to be mindful of. But let me just delete this right quick. I'm just sharing you some Forex anatomy secrets here. But right around here is where we could potentially see price retrace and push up to. Also, one thing I want to do, I want to, okay. Yeah, so then we got the stochastics here. Now, what I want to do next is go to the daily time frame. So then let me zoom out and let me go to the daily time frame. But we have this halfway mark at 110.72, you could say, or 110.70. So we need to be mindful of that. But let's go to the daily. Okay. So right here on the daily, we have what appears to be a what? What do you think formed? For those who are familiar with classical charting patterns, what do you think formed? We had a push higher. Right here formed a swing high. Price corrected and made another attempt to test these highs, but couldn't break it. And then from there, we saw price slide and expand lower. We saw this nice expansion lower that took place on Friday. But what type of classical chart setup is that? Yeah, okay, Marie chimed in, Brandon chimed in. Yep, exactly. That's a double top. So then not only do we have this strong weekly bearish signal on the weekly time frame, last week we had this strong bearish engulfing candle, but also on the daily time frame you can see this double top pattern on the daily. So it lets us know that we should be looking for an opportunity to sell on a pullback. That's another confirmation right there. And the more confirmations you have, the more confident you should be on your particular bias. So then right now we're looking for opportunities to sell. And yesterday I did enter a sell, but it was too soon. I should have waited. And you know, I went in. I thought I saw something that I really didn't see, but I should have waited. And it's all good. But right now, what we're doing is we're going to wait for price to, guess what? Hit this level right here. The 110.70, 110.72 area, which is not too far from the neckline of this double top. You see that, guys? You know, so then oftentimes the market will leave footprints on where you should potentially see a reversal take place. But in the meanwhile, we should expect price to slide and push higher up into this zone right here. So then what I'm expecting is a push higher between this zone at 110.70, you could say 110.70 and 111. Okay, and let me do that again. Okay, yeah, 110.70 and 110.11, or 111, I mean 111 institutional level, which is right around there, which is good enough. So then somewhere around here is where I'm looking for price to go right now. I know we did a weekly outlook for our, with our premium members, and I gave multiple areas where I think price could find some sort of resistance. And I forgot what plan this was. I think this could be like plan C or whatever, but I'm looking for a deeper correction now. I know I gave you guys a certain zone on plan A that came, I believe, right where price is now, but I'm thinking that we should see a deeper correction, mainly because of what we see right here. We see on our slow stochastics, it's what price is, or stochastics is oversold. So it's oversold, and there's a possibility that we could see momentum cycle upwards and push price a little bit deeper to the upside, or have a deeper correction in price. So then if we can get a correction into this zone right here, then that's when I'll look for bearish confirmation before I enter my sell order. But it's very important for you to wait for that bearish confirmation, because for all we could just see this could just be a simple correction in anticipation for a nice impulsive push to the upside, another strong leg. So then we have to be careful, guys. We may plan out these trades, but just because we plan them out doesn't mean we're going to execute these trades. We have to look for bearish confirmation. We have to look for entry signals, or entry, we have to pay attention, or utilize our entry rules in order to get involved in a trade. And that's probably the one major downfall with a lot of traders. A lot of traders, they trade support and resistance, but they do not have any entry rules or confirmation entry signals. So then we have a few that we teach within our private trading community. For those who are interested, you can still join for $1. But right now, what we're looking for is for price to retrace into this area right here between 110.70 and 111, this 30 pip zone, and then look for an opportunity to sell on bearish confirmation. So that's what we're looking for right now. So let me just draw that in. Something like this is what we're looking for. Price to correct into this zone, or to this area right here, and then for us to execute a short upon bearish confirmation and trade that lower. And who knows, we can possibly trade it to this 110 psychological level. Who knows? But yeah, that's pretty much what we're waiting for. So then we just have to be a little bit patient. Now, with the way this is looking right here, and this bullish candle right here, we could get a close above this, above yesterday's candle. We get a higher high, higher close, and we may be able to see some sort of reversal setup or reversal pattern on a smaller time frame. So then I don't want to go into all the details of that right now, but some traders, they trade the counter trend move. They trade the corrections. So then if this does close bullish on the daily and it closes above this high, then what some traders do, they'll enter a buy and they'll place their stop right behind this low right here. That's what some traders do. So then and of course we have the stochastics on the daily that it's already oversold. So then that could be a decent trade that you can possibly look into. So but yeah, I don't want to go too far into that. But with that said, I know Marv, did you have anything you wanted to share?
Well, not really. I think you kind of shared a lot, but then I just kind of wanted to mention that for the moment, we're sensing this relief in the market after falling for the past few trading sessions. And this is typically natural price action that you're going to get that correction and pullback. So just be mindful of that. And I know Melvin, he mentioned certain areas where we can see the possibility of reversal, and just really carefully trade that and really carefully follow the news, because anything can change. But if you look at some of our risk-oriented assets, if you look at various heat maps and even our futures, you will see that there's a little bit of relief in the market, and that's why we're getting this bounce currently in both the Euro USD and the US dollar Japanese yen, ahead of further slides lower in both pairs. But yeah, like for now, we don't have much as a catalyst. Later on in the U.S. trading session, we do have the consumer confidence numbers that's going to come out that will provide some direction for the greenback. So then, of course, we're going to be following that, as well as headlines regarding geopolitical concerns regarding Brexit, the U.S.-China trade negotiations, and even treasury yields. Even if we do see a further tumbling of treasury yields, I know right now, I know we don't have time to go to it, but the U.S. 10-year treasury yield is actually moving higher and turning higher, and that's and that's the reason why we're seeing this correction or this bounce in U.S. dollar Japanese yen, because it's correlated
it's
to the
closely
U.S.
tied.
Yeah, it's correlated to the U.S. 10-year treasury yield. So then, that's providing support for the US dollar versus Japanese yen. And if we look at the Dixie, I think we're seeing signs of stability in the Dixie as well. That's helping with the Euro USD. But yeah, that's pretty much what I wanted to point out for now. For those of you guys that do want to learn more about the fundamental side of trading, then I encourage you guys to join our Forex Anatomy private trading community for only just $1. That's if you guys do want to take your trading education to the next level, and just kind of learn how we approach these financial markets. But
Yeah,
yeah.
yeah, and one thing I wanted to share, of course, it's optional. You guys don't have to join. This is a decision that's up to you. But one thing that we want to emphasize is that if you're serious about taking your trading to the next level, then you should strongly consider joining. Definitely soon, because pretty soon we're going to release a new set of videos that's really going to really bless a lot of traders, coming shortly. I know we've been working on these videos tirelessly, producing these videos, and I think to my downfall, I'm a perfectionist. I like to do things and make sure it's perfect. So then, of course, that could be to my downfall, because if I see something that I don't like, I may scratch a video and do it over again. But for the most part, we do have some new content coming. So just be on the lookout for that. Over the next 2 weeks, you should have access to that information. But one thing I want to point out before we close off is, this is the members area. And we do have what you would consider a powerful Grand Slam trading strategy. And I highly recommend that you guys join just for this report in this video, because we share a lot of good stuff in it. And if you apply this strategy by itself, and if you have the patience to apply it, because it takes a lot of patience and discipline, then you'll do pretty well as a trader. But I don't want to spend too much time selling or talking about that. What I want to do is ask you guys if you guys have any questions about trading in general, anything trading related, before we call it a day, before we call it quits.
Yeah. This is our time where we're gonna open the floor. So if you guys have any questions about anything, related to the financial markets or relating to, spot currencies in general, then this is your time to ask, because we're here to help you guys learn. So whatever you need to learn, just ask.
Yeah.
But
and if it's too complicated for us to cover on this free webinar or free training on Technical Tuesday, then we recommend that, if you do have a question that's more complex, we do recommend that you join our private premium, because we can probably delve into it in more detail
and even answer it for you during those webinars.
Yeah. But I guess we don't have any questions. So I hope you guys got a lot of value from today's Technical Tuesday session. I know Abraham say, hi, I'm connected from Buenos Aires, Argentina. Yeah, thank you so much for coming, Abraham. We really do appreciate you guys coming.
Yeah, thank you, Abraham.
Yeah.
Yeah.
But I guess since we don't have any questions, we can close out for today. I hope you guys learned something on today, and I hope you guys know what to expect throughout the week. But thanks, Marie, for coming. I know Marie's one of our premium members. But yeah, and if you guys have any questions about anything trading related, and also about our private trading community, please let us know. If you guys want us to call you first before you decide to join, because I know one person or a few people in particular said, can I talk to you guys on the phone before we join? So then if you guys need that, just let us know. We're willing to do that, even though we're really busy. We're really busy, but we're willing to make time for you guys. So then just let us know if you want us to contact you privately and personally, and we can do that. But all right, guys, thank you guys so much for coming. We really do appreciate you guys. And we'll definitely talk to you guys soon. Thanks, Alex, for coming. Yeah, thanks again. We'll see you on Wednesday. Yeah, and also we do have a private trading session on Wednesday for the premium members. So then you guys will get an email with more information on how to participate in that webinar for those who are premium members, and for those that do want to join and they want to get in on tomorrow's webinar, you can. But all right, guys. With that said, we hope you guys have a wonderful rest of your trading day. And may the force of trading be with you. May you do good. May you excel. May you hit a lot of targets. May you do very well in your trading for this week. Until we meet again, we hope you guys have a wonderful rest of your week. And we'll see you guys next week on our Technical Tuesday session. Stay blessed, and we'll talk to you guys later. All right.